So these are some of the changes that could affect your tax effect accounting calculation. First is temporary full expensing, and terminated on 30 June 2023. But it will have legacy issues and traps which you would need to consider. So firstly, if you have claimed temporary full expensing on depreciating assets, please ensure that you do not also claim tax depreciation on those assets going forward. So that could happen if you don't have a separate tax fixed asset register and you made an adjustment in the prior years for temporary full expensing in your statement of taxable income. So be wary of that. Another trap to be aware of is if you acquire a company which joins your tax consolidated group. If that company has claimed temporary full expensing on its depreciating assets, when you're performing your push down ACA, allocable cost amount calculations, you cannot allocate ACA to those assets again. So that's another trap which you need to be aware of. The next one is the technology investment boost, only applicable similarly to small business entities. Those with an aggregated turnover, and this is a global group turnover of less than 50 million. So if you qualify, you can claim additional deduction of 20% of the expenditure. So if you spend $100, you get an additional deduction of $20. There's a cap of 20,000 in relation to this concession. That means expenses of 100,000. So expenses which qualify for this concession would be expenditure on expenses and depreciating assets to digitalize your operations. So website, portable payment systems. You can go to the ATO website for examples of expenses which qualify. You must also incur the expense before 29 March 20, between 29 March 2022 and 30 June 2023. If you incur costs on depreciating asset, you can claim 20% on the cost, even though you'll be depreciating that asset over time.